Welcome to today's market report. European shares rose on Tuesday as investors were hopeful of a faster economic recovery, while technology shares led the advance after French IT consulting group Atos ended talks of a potential takeover of US rival DXC technology. Shares in Atos SE gained 5% after the firm said it has decided to discontinue talks about a potential $10 billion acquisition of DXC Technology Co. The European technology sector rose 1.4%, while the STOXX 600 index gained 0.8%. An upbeat mood from Asian markets spilled over to Europe in early trading on hopes of more stimulus for the US economy. Investor focus also remained on earnings reports from across Europe, with Fresenius Medical Care tumbling 12% after the world's #1 kidney dialysis firm warned it suggested net profit would likely drop this year. BP plunged 4% after its profit in the last quarter of 2020 sunk to $115 million due to weak energy demand and poor trading results. Oil was up on Tuesday, climbing to its highest level in more than 2 weeks, as a strong market and expectations of a global economic recovery from COVID-19 spurred fuel demand recovery hopes. Brent gained 0.78% to $56.77 per barrel. WTI rose 0.8% to $53.98 per barrel. Gold futures were down 0.67% to $1,851.60 per ounce. Silver surged to 8-year highs amid Reddit-inspired rally. The most active futures surged as high as 13% to $30.35 per ounce on the Comex, the highest level since February 2014. GBP/USD retreats from an intraday high of 136.98 to currently around 136.85, up 0.2% on the day, while heading to Tuesday's London Open. Although market optimism favoured the pair's uptick from the short-term support line, both need extra fuel to cross the multi-month top marked the previous day. Also challenging the quotes further upside are fears of the coronavirus variant first found in South Africa. The Sky mentions 11 latest cases of South African strain found without any travel history, totaling 105, which in turn pushes the Tory authorities to the mass testing drive when they are already boosting vaccinations. On the same line, Brussels also raised bars for foreign travels, especially when they are battling the vaccine need. The European Union toughened its restrictions on visitors from outside the bloc on Monday, with travellers only allowed to enter freely from countries with very low numbers of cases and almost none of the more virulent variations. Even so, US PM Boris Johnson praised the country's vaccine drive and stays optimistic over further flattening of the virus curve while backing early open schools. Also on the positive side were comments from the FT suggesting UK Chancellor Rishi Sunak's readiness to keep Tory manifesto of triple tax lock during the March budget. On a broader scale, the receding retail rush towards the silver and equities joined US President's push for stimulus. Also boosting the mood could be China's readiness to refresh ties with America. Against this backdrop, stock futures in the UK and the US print mild gains, while those from Asia remain strong. GBP/USD traders will have to pay close attention to macros amid a light calendar. Social media chatters and stimulus updates coupled with virus and vaccine news should be followed seriously. Given the recent risk-on mood, hints of further worsening of the virus in the UK may trigger the much-awaited pullback of the cable. However, it's the week comprising the US employment data, and hence trading may remain lackluster ahead of the event. Unless declining back below the 3-week-old ascending trend line, currently around 136.55. The cable buyers may keep targeting the 137.55 to 60 resistance area on the table. Euro-dollar has been failing to take advantage of the upbeat market mood and advance. The critical 120.50 triple bottom looks vulnerable after the dead cat bounce as concerns about Eurozone growth, vaccine supplies, or US stimulus may spark a sell-off. US President Joe Biden has met a group of 10 Republican senators who laid down a stimulus proposal worth around $600 billion. Both sides described the meeting as productive, a positive development. The dollar index was down 0.1% at 90.965. On the back of that, this is today's market news. Thanks for listening. We'll see you next time.